Hello YouTube. Today we're going to discuss the Q4 earnings of the company Alphabet, the mother company of the famous company Google. We're going to do so by going over the next items. First, revenue. Second, operating margin, free cash flow, assets, the outlook, valuation, the technicals, and the conclusion that I will give at the end. Please remember that this is not financial advice and I am not your financial advisor. Okay, the first one, revenue. We can see that the revenue increased by 12% year over year. The same goes for services, cloud, and every other segment. We can also see that Google search is doing alright, despite people being saying that ChatGPT will get Google out of business. No, it's still growing. We can see year over year growth from 2024 compared to 2023, and as well for the rest of the items. YouTube is growing strong as well. So the revenue is looking good. Second thing is operating margin. You can see that operating margin here increased from 27.5 until up to 32.1%, also looking very good. Assets. Asset-wise, Google is a very strong company, lots of cash. Here it is. Front 50 compared to 402. Cash went a little bit down, not that much. Liabilities went up by a small percentage. So all in all, way more assets than liabilities. So Google's doing all right. Then the outlook. Google is a company that never provides an outlook. That's unfortunate, unless compared to hims and hers, which always does. But we can still say something about outlook because analysts cover companies like Google, and they know what, or they can just expect what Google is going to do the next couple of quarters or years. And this is the annual EPS estimate for this year, this fiscal year, and next fiscal year. And we can see that the estimates are going to be 8.99 and 10.24. And we can already see a sneak peek of the forward PE ratio, which is pretty low by tech company standards. So that was the next point, evaluation. Google right now is trading at a very low PE ratio. The forward PE ratio is also very low. Google has an advantage compared to other tech companies because tech companies like Microsoft, which we will see in the next video, are trading for way higher PE ratios, which limits the upward potential of the stock by investing into it. Then the last one, the technicals. I just discovered or covered all the major key points from the last earnings, which were looking good. So you can ask yourself, okay, then if everything's looking good, why is Google stock going down? The highest point was around $206 in beginning of February, and the beginning of March, the lowest point was 165. So then why is Google still going down? It dropped almost 20%. So why is that? Well, the biggest reasons are technical, in my opinion. We have a few free fair value caps placed here. There were 3 of them, which are now filled. Why is that? Fair value caps can remain open for a pretty long time, but when the market turns, when they're starting to get more negative news involved, the market usually goes down and is filling these fair value gaps. So we went down to this support level. If market conditions are gonna improve, where we might see an uptrend again. Also, one option which was mentioned in the news is because the cloud revenue miss of 1.8%, small miss. And also the same goes for the revenue, which was in line but slightly lower than analysts expected. So that could have been the reason why Google went down. We saw it trading in a range from early December until early February, so basically for 2 months. Then it rejected the range and then it went down. In my opinion, this is just a normal, healthy correction, which happens sometimes. S&P went down, the NASDAQ went down, tech companies went down, Google went down. This is normal. This is not something like a major crash. Still a little bit below 20%, and we might see a reversal. It's already up in pre-market. Um, so the technicals are looking good. We filled those fair value gaps. We are currently sitting at a support level, so it's not looking that bad for Google. The last one, my conclusion. We covered the major key factors in my opinion. Google is a very good company, very good stock, has been around for over 25 years, has good earnings every quarter, every year, is doing very good. This huge drop, almost 20%, is in my opinion a buy opportunity because, in my opinion, Google can go way higher, way above the $200 mark. So this future forward PE ratio of under 20% is, in my opinion, a huge buy opportunity. I am buying. This is not financial advice. I'm just telling you what I'm gonna do. I'm gonna buy Google stock because I think it's undervalued right now, and it can go up higher than this, higher above the $200 rate. Let's say around 250 is my fair value, fair price for Google stock. And we will see when the market turns, when the negative emotions will fade away. We'll see what it will bring for Google. I think we'll start a new uptrend soon, either this month or in the coming months, at least this year. So that was my evaluation of Google stock. The earnings, past earnings, they were good. I think it's a good buy opportunity now. Of course, again, not financial advice. Always do your own research and never buy something because someone with a camera says something. At least that's my opinion. Let me know in the comments what you thought of this analysis. Please like, comment, subscribe. Let me know what you think of this presentation style, and I'll see you in the next video.